Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. As the range is extended higher, volatility's picked up. Yesterday was pretty big weakness early in the session, turned into late session rip higher, a lot of strength, and that strength carried into today, other than a little bit of weakness early on the Nasdaq. But overall, it's been higher all session until the end of the day. President Trump signing an executive order on social media companies. The details there are thin, but we've seen Facebook, Twitter take a hit. Tech broadly has come in a bit as well, just given the ramp up and friction between the U.S. and China. And there's going to be an announcement tomorrow, and that, again, has caused some profit taking. We're still at very elevated levels. The Russell was unable to turn green for much of the session, led the way to the downside. We've seen the S&P retest support about 40 points off the high of the day. Nasdaq get back near unchanged. Let's take a look at the heat map real quick before we take a look at the charts. And overall, you can see here it's tech. Facebook down 1.77%. Disney getting hit. Salesforce is actually presenting earnings here after the bell. Right now, Intel, you got a number of tech companies, financials, which had led the week higher. They're coming in. Energy's coming in. So a very mixed board for overall in the session. But take a look at the S&P. A little bit of a spinning top that developed on today's session. Extending gains, could not hold those gains. The weakness did get down to some support, the overnight low. However, our momentum indicator has risen along with the price action, and that comes in about 30.40, and we're finishing the day right there. So that's going to be an area to watch as the overnight and the settlement prices kind of align with that momentum indicator. If we get a range overnight, could be able to hold above there. It's going to be supportive coming in tomorrow. But if we stay and continue to trade, say, down below 30.35, 30.30 overnight, it's going to add a little bit of pressure here. But again, this has been a move that's hard to fight out above the 200-day moving average. And that 200-day moving average is now support right around 3,000. So don't forget that. And the Nasdaq, this has been about 9,500. It's our resistance level. We got a couple resistances, but this 9,500 seems to be pretty sticky. Now, overall, you got these bars right here. These are the early highs. They could not break through that. And then the days that did, they've left tails. Big tails, and we've talked about this volatility on either side. Big tails all across all sessions here, the last 4 sessions this week. But you do have the golden cross, the 50-day moving average moving out above the 200. That's bullish. Yesterday's move and weakness held trendline support, and it's bounced back. So you got your lines in the sand. You could get some closes out above 9,500. It's going to be bullish. You get a breakdown below here, yesterday's low, a break below this trend line overall. That's going to be bearish and cause additional selling. You still have support, though. We like to think of this 9,000. It's a really big, just sort of a pivot area that if it gets down there, it's going to be a barometer of testing. Does the weakness, does the selling, can it chew through there? And if it gets down below there, that's when it gets to be a different market from this elevation area. And then the Russell, it does face the 200-day moving average overhead. And today was a big day of weakness. The Russell has run up pretty sharply this week. Now, there's also the resistance here from where we broke down in March. That brings a lot of resistance. But remember, the Russell here in February did not make a new high compared going all the way back to 2018 in September and October 2018. Now, if you take a look at that, you also have a retracement area, and this is the 618 retracement aligning with this area here. So you have a tremendous amount of resistance in this area of the Russell, right around 1440 to 1450. So you also have the 200-day moving average overhead, which I mentioned. So keep all that in mind here. The Russell, if you're going to be short something, we do like being short the Russell over the others, especially after the strength this week. Now, the 30-year bond, these are the yields. I want to take a look at the yields in the 30-year and the 10-year real quick because the 30-year has been pretty constructive. So this is that range channel that it hasn't been able to really get and hold above. It's really testing it. The yields are above the 50-day moving average, and they're holding above there fairly well. So that's helpful, but it can't really get out above there just yet. And then, despite the weakness here late in the session, we didn't really see the yields move off this at all. And the prices didn't do much, obviously. So the 10-year, a little bit different. 50-day moving average is still resistance. Hasn't been able to close out above there. So overall, this is yields lower for longer trend, but it's been very, very, very quiet here over the last few weeks. But when something's quiet for a long time, you're typically going to get a move. When those markets sort of just bunch up, crunch up on the chart, it picks up for a lot of pent up momentum, pent up direction. It's going to move somewhere. You're going to see that. Overall, though, and we've talked about yields lower for longer, and that's something to keep in mind. Now, we've talked about potentially seeing another flush out in yields, one more. And now the other part of it is keeping yields up is the supply hitting the market. So when the supply hits the market, prices are going to be going lower theoretically, and that keeps the yields up. But prices have been holding fairly well. The demand for the extra treasuries hitting the market over the past couple weeks has been gobbled up. That's actually a bullish sign coming out of this, and we think that's one of our main backdrops here in the near term to think prices have one more move higher. And then if you look back as well at gold is another contract here, another commodity that we've been very bullish on. It's holding this breakout area. Now, this is a continuous contract, continuous chart for gold. Overall, you got the 50-day moving average. It's hitting that, pinked it yesterday. The continuous, as you go into the August contract, it's moving out above this. And that could be a little misleading at times because overall, the August contract today did hit resistance. So we had resistance 1744. Still, there's support being held, and the 50-day moving average in the August contract comes in a little lower. So we like gold. We like gold a lot, and we think it's going to get out above there and move. Just got to be patient with it. And as we had talked about over the past week and a half at least, be prepared for options expiration. And gold got back down to 1700. That was right into that options expiration. And it made anybody who was holding calls, made them almost worthless because that was the largest open interest area. But it was also an open interest area for puts. So you didn't break down below there. Anybody who had 1700 puts and below, they didn't make any money on that options expiration. The June gold contract goes off tomorrow, and then we go in you're only trading August now, but the official fall off is tomorrow. First notice day, and then from there, that's where we imagine next week the gold contract August is going to start to pick up. Now that you sort of remove a ceiling that those expirations can bring. Now, silver is actually a really great story, and we really like this a lot. Silver sort of building this bull flag pattern, holding out above the 200-day moving average now. Building this bull flag today was very healthy. Couldn't get out above here though, and there is some resistance. And we've talked about this before. You have this resistance in silver here overhead, but we like silver. We think this move that's pent up. Talked about that pent up action earlier today. That's really what's behind the theory of a bull flag. You get this pent up move, and then you break out. Crude oil is another one. Just keep it on our radar. Obviously, a lot of resistance up here. We do think that it's exhausted. Strong day. Came back despite big builds on the crude headline, big builds of gasoline. The other thing, though, to keep in mind, Cushing drew down, and that's being supportive. We're going to see a meeting here between OPEC Plus, and Russia's not totally on board extending those cuts, and nor they may not be necessary, people think. So with the market coming back, with some demand coming back, and normalization. So that's the real question as we head into the coming weeks. Does OPEC continue to implement the cuts that were there in the new agreement at the worst of times? So keep that in mind. And then the euro, just to touch on some of these currencies, the euro, big day today, out above the 200-day moving average, out above this resistance line that we've been talking about, this channel. But you're not in the clear because you're not breaking out of anything other than this near-term area. But you still have a lot of resistance here. It's a 50% retracement from all the whipsaws in March. So a lot of resistance here at about just below 111, 110.85 or so. So keep an eye on that, and that we did stall there. The dollar did get a bid on some of that weakness late in the session today, but it's on the lows of the day, falling out. And we do think that one morning, we could wake up and we'll see the euro sharply lower as this euro bond there's a lot of questions, and that is still a lot of steps to get that totally implemented. And any sort of action against that would overall move the euro lower very, very quickly. And then lastly, take a look at Aussie. We talked about this earlier in the week, 200-day moving average overhead, as well as this resistance line from March. So the Aussie, big area of resistance it's testing into. We tend to think it's going to fall back. Canadian dollar, another one that's had a big week breaking out of its channel. We talked about it again, the pent-up action that you have here that just from all of this, and now it's breaking up above here. But again, these aren't in the clear. We're not really breaking out of anything. You have a lot of resistance, a lot of damage done here, 50% retracement. So we tend to think we're running into resistances. And this is, again, one of the reasons why we think the dollar is bullish over the long run, because you imagine what the Fed has done here, and the dollar's held ground in such a manner. It's impressive. Give us a call. We're here to talk about anything on the board with you. 312-278-0500. Remember, though, futures trading involves substantial risk of loss. It is not suitable for all investors.